So these foreign reserves are obviously very critical to foreign investors who we know are one of the biggest suppliers of dollars to the market right now. Would you say we're at a comfortable level right now? Do you get the sense that this could trigger even more flows going forward?
The truth is the foreign reserve has become a major component of our own economic policy. And if you look at one of the major achievements of the government, whenever they talk about it, the reserve always comes to play. You always hear how it was 30, it's now 45. And I think some of the things that we can see that have brought about this is the fact that oil price is where it is. It's been moving up significantly above our budget benchmark, especially coming from a low base, which shows that, I mean, more revenue accruing into the account. Then again, we've witnessed a lot of portfolio flows into the country that has helped to reduce the amount of FX that the central bank is parting out with, or the amount of reserve we're using for currency play. Then the Eurobond, auction, the switching to foreign currency denominated debt has also helped significantly to increase the level of reserve. So I'm not surprised that we are currently at 45.
So we're in a good place in terms of dollars, but in the context of what has happened, one, in the international markets with the Fed rate hike last week, and then in Nigeria we're seeing a gradual decline in fixed income yields. The carry trade is probably less attractive now. Are we beginning to see that impact on foreign flows? Because what I'm hearing is that those flows are beginning to decline. Would you say that is the factor here, or are there other factors at play?
Well, the current Fed rate hike, I would say has some form of impact on Nigeria, especially given forward guidance that there might still be about 3 sessions of rate hikes this year. What investors are looking onto is what the risk premium is, right? So with declining yields in Nigeria and the continued increase in the yields in the US, then the premium becomes very tight. And what they want to look at is the risk worth it? Is it worth being in Nigeria, or is it worth being in other emerging market or other frontier market? So that has its own impact. Do you understand? But I don't think that is why it is happening now, though we've seen subdued inflows, especially in March. Interestingly, January was actually the highest month for our flows.
So it's from a high base, so to speak.
Since the introduction of the I&E window. But in March, we've seen cautious buying into Nigerian assets. We're not seeing the flow coming in the way it used to come in. And it is expected. We're also approaching second quarter, going into third quarter, where people are beginning to be cautious about the whole election scenario. But again, the good news is that we're not hearing too much stories from investors around the election. Since we were able to move from the ruling party into the opposition, I think people are beginning to treat election in Nigeria this year as one of those things. The calculation is a bit muted, if you ask me.
Right. Okay. But let's talk a bit about the central bank's strategy here, because my sense is that it's clear that they want to build up those reserves, especially ahead of the elections, when we know that some foreign investors are going to be a little more jittery and may begin to pull out some money. But given what we're seeing in terms of the declining interest, at least relatively month on month, by the foreign investors, would you say that the MPC is perhaps under some pressure to keep rates relatively high, such that we can continue to see those flows while the central bank continues to build those foreign reserves?
Well, that will depend on what the central bank itself wants.
Apologies for the brief technical challenge there, but Sam Ocheho is still with us. And Sam, I wanted you to respond to that point about the central bank strategy and bringing this into the MPC's decision. Now that we are seeing a relative decline in foreign investor interest, and given what is happening with the yields in the US and, of course, the declining yields in Nigeria, do you think that the MPC is under some pressure to keep rates relatively high?
Okay, I think you started by asking me if we were in a good place. I think we're in a better place compared to 2 years ago,
sure.
When especially at the earlier stage of the CBN governor's tenure, we're significantly in a better place. The central bank, like I said earlier, is one of the major reasons why we'll see the I&E window price stable at 360. And the reason for that is they are shoring up their reserves. The central bank has been in the market shoring up their reserve with the excess liquidity, and the key word there is the excess liquidity in the system. So they have been the one buying it. Otherwise, we'll have seen some appreciation in the currency. So back to your question of if the strategy. Well, the strategy has worked for them. Currently yields are at, if you look at it, effective yield on the 1 year tenor is probably at 16% compared to the 13% handle on the discount level. So if we look at it from that angle, we'll still say it compares to most of the emerging market.
So my point is that are they under pressure to keep it at that level, not given what is happening with yields offshore?
They are not under serious pressure to allow a little bit of ease in the yield. They are not under significant pressure at the moment. But they also have to be careful not to let the yields, not to let it rally more than it has already rallied, because then they become unattractive. And if the goal is to keep attracting this fund, then I think they need to be able to show some stability in the yields level. Otherwise, the danger of it also rallying significantly is that people start taking profit.
Right.
And when they start taking profit, it then puts more pressure on the currency. And the question is, the central bank ready for the currency move?
That's my sense as well. I do get the sense that even though many are calling for the central bank to do something, because they don't want to send the wrong signal to the foreign investors, they may just keep the yields where they are. But especially the interest rate decision where it was at the last meeting. Quick point on the outlook for yields, though. Given all that we've seen with the OMO auctions, how do you see yields going from here?
I think there's still room for yields to come a bit lower, especially in the long end of the curve. And we'll see more move in the 1 year end of the curve. But I think there's still more room. And the reason for that is, despite the fact that when you listen to the central bank talking, they talk about tightening. And this tightening is hinged on inflation, right? Some of the forward guidance we've seen is that if inflation gets to 12%, they might be able to do some easing. But if I look at the activities of the central bank, I think there's already a bit of easing. There's not tightening the economy, when you are tightening, you expect rates to go up. But here we are tightening and we are still seeing rates going down.